Let me hit this out. Let's go to this. All right, this is Jeff Scott. So let me just introduce myself. Welcome to this quick after market close on Tuesday, 5/19/2020 video. I call today Turnaround Tuesday. And I'm sure you know why, because it was an interesting day today, and it'll be interesting to see where we go with this. Disclaimer, as everybody else has, it's for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent, although I talk a lot about certain tools. Nobody pays me to say anything, and I paid for the tools. Trading involves risk, and you alone are solely responsible for any decisions you make. My background started with CanSlim and a number of folks that helped me get better at CanSlim, and then John Person, who taught me how to actually make money trading. I have a number of tools. If you check my desktop during the day, you'll see TradeStation and Thinkorswim open, and then a number of tools for analytics. Most likely HGSI will be open, EdgeRater, and then Dr. K's tools and Sagar's Q tools, which that's basically my toolbox today. For those that don't know HGSI, here's the website. I am not affiliated, so I don't get a commission. So don't do it for me, do it for yourself. Free 30-day trial, no credit card required, and under investing strategies, you'll find a boatload of movies by myself and Ron Brown and others who, like me, are unpaid volunteers who support the program because we like it and it's been very good to us. So I was watching my portfolio today, and I'm not sure how often you would check the markets, but I was up a ton of money at lunchtime, and then at about 2:30, 3 o'clock, I noticed that the numbers came down hard. And I looked at my screens, and I kind of figured out right away what was going on. This is Moderna. Moderna was a relatively cheap, if we go back a year ago, it was a $16, $20 stock. Vaccine producers never had anything come to market, who came out before the market opened Monday with a very positive report about their first 8 patients, or 8 of their first patients dosed, and that they made neutralizing antibodies, or which we'll need if we're going to fight this off. And you can see that the market went from 65. That first opening bar traded up, I believe, to 94. Let's see. I thought I saw a 94 tick at one point during the day on this. Here it says the high was 87. Maybe it was 94 pre-market. And then it settled down, went sideways until the end of the day, sold off a little bit after hours when some discussion came out. After hours, they decided to do a secondary, which is what you do if you have an underfunded company or you're about to have a lot of expenses come in. So it's not necessarily a bad thing. If you get a drug approval, you might have to do a secondary to raise money to hire a sales force. Well, today it opened up a little bit lower, and I would say it's most likely because of that after hours action. But then it traded down throughout the day and took its biggest dump of the day right here at 3 o'clock. Now, if we go and we look at the market today, let's just look at the E-minis, for example. You could see the E-minis also came down at 3 p.m. This is a 15-minute chart. If I take it to a daily chart, you can see in the E-minis were actually, or make sure this is time frame is daily, are on a buy signal, okay, which came in yesterday, had a strong day, but sold off at the end of the day, and the E-minis were down 30 points today. The Dow futures were down even more. They were down over 300 points, also still on a daily basis on a buy signal, as they are on a weekly and although they're in a sell and a monthly. If I look at the Russell, a buy signal, and if I look at the NASDAQ, the strongest of the bunch actually puts this little dot here, which is consistent with a developing divergence. And you could see it here. Just get one of my tools. I mean, I look at this thing all day long and I never use a trend line on it. I know it's got to be here somewhere. Here it is. You got an uptrend there. Pretty, I can't draw them with crap, but there's definitely an uptrend there. Just somewhere in there is an uptrend. And look here at the MACD. You're not seeing much buying pressure helping to prop that up. So that's a clear divergence. And now I paint the red dot here, which is concerning because you have a new high and you've got that divergence. Here was the prior high. If we take this high out and the MACD doesn't get better, that will be a very profound divergence. But that's already showing you've got some. But you could see the markets, our short-term on buy signals really helped a lot. Clearly, by Monday's performance, Monday being the 18th, big moves up. But today, they all closed down. You could see the futures over here. And you could see that the VIX today moved up. And I bet you if we put the VIX on a 5-minute time, or say a 15-minute time frame, we're going to see a buy signal coming in at 3 p.m. So am I just trying to be a, what's the word I would use? They had a Mel Gibson movie. Am I a conspiracist? I think it's all about a conspiracy. I think it's about Moderna, and I think the fact that the market realized that they gave too much credit to this company, and it may turn out to be everything we hope it is. And boy, as an American, I hope it is. But if this market pop that we saw on Monday was related to hopes and prayers of the new drug, I think that's a problem. If you want to look at what else I look at during the day, this is the daily charts of the futures. I love Sagar's tools for, well, I've got them for TradeStation and Metastock. I have most of my stuff is in TradeStation. Not all of my stuff or very little of my individual stuff are in Metastock. So I use mostly Metastock for scanning some things after hours with Q tools, but I use TradeStation HDSI for everything else. Now, if I could only get the Q tools at HDSI, that would be awesome. These red dots are, I think, are either headwind resistance or those are stretch. The box is what's called, the square is headwind resistance. And both of these things occur as a market that is getting overextended. It paints support and resistance on my charts. This is I think he calls it a watermark resistance. So we are clearly up in resistance areas. We're getting lots of these pluses and red dots. These are the daily NASDAQ futures, the daily E-mini futures, the daily Dow futures, and the daily Russell. Now, the NASDAQ actually set a nominal new high today, took out the prior resistance, and this is the prior high over the last, on this move up. And, this may turn out to be resistance. You can see John Person on this time frame buy signals in the green arrows and sells on the red. You could also see that I don't have to worry about where trend lines are because Sagar's awesome tools are painting trend lines on the chart, wedges and others that may be useful for me as I try and figure out what's going on. Now, I typically during the day will drop this down to a 15-minute. I do work full time. I'm not a day trader, but I do like to manage my positions. In fact, I started doing this video at about 3 o'clock. I looked at what was going on. I took some profits and bought some protection. We'll see how quickly I have to get rid of that tomorrow. But look at what happened in the last 15 minutes. We went from resistance, 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 all the way down to support, even broke through this watermark support here. I don't see green arrows under these 3 bars or green dots. We did have one here and a little bit of a bounce. So this was a hard sell-off. And if I look over at other things that I might look at during the day, you could see, again, as I showed you before, the VIX ran up. The dollar's into resistance on the 15 minutes. Gold looks like it's going to benefit from this, and oil eased as we went into the end of the day. All right, well, that's my sense of what the market's doing. Let's jump into HTSI very quickly. And this is I should show you, I've got Thinkorswim open. And I did set my intraday options to Thinkorswim, and I enabled them. Then I just did an update and include intraday data. I'm not going to do it again. And let's take a look at what the market showed. So the data I'm showing you will either be the end of the day data, but not the final end of day data, or it'll be very close, depending upon, I can't remember if I ran it before or after 4 o'clock. I highlighted Major Market Plus, and I'm going to open up my warehouse view. When I click the warehouse view with Major Market Plus, that's what will open up here. And let's just go into a top-down review mode. And I have should have 27 things here if I open it all up. And I'll close it down, for my charts can be bigger when I get done with this part of the review. I could see Treasury bonds up at the top today. Reset that. I have to hit the combo. Make sure the combo is at the top. Gold miners, silver, gold are at the top. The NASDAQ outperformed. Treasuries were actually not performing well today. You can see utilities, industrials on the bottom. And look at the big stocks getting hurt. S&P 100s, transports, the 500, the dollar's weak. Biotech, which has been extremely strong, was weak today. So we can see on one-day performance lots and lots of red. Let's take a look at some of those major market indexes and see if we can make any comments about where the market might be over the next couple of days. All right, so let's open up new charting window, and let's go to all right, so let's go look at the S&P 500. So what do we have here? We have, as I talked about this weekend, we have been range bound between the 61.8% retracement and the 50%. Yesterday, this may end up being a false upside breakout, which is not necessarily a good thing. So I'm a little bit nervous that, was this a false, why is that not doing that? Was that a false upside breakout above this area of resistance? And did today we break down? Now, I also said over the weekend, and I think I entitled my thing something along the line of Darvis box, and I talked about how prior to the weekend, we have been living, I believe it was 22 days in this range, bounded by these two retracements, and that you make money in a Darvis box by selling resistance. Let me change that to an arrow. You make money by selling resistance and buying support. And then you look for breakouts or breakdowns. So if this was a false upside breakout, the natural thought is we're going to go back down. And by the way, this is a pretty broad channel here, the difference between 29.32 and 27.90, so 140.60. That's a fairly big move. That's a lot of handles. So I noticed this late afternoon, and whether it was the right or wrong thing to do, I went and I sold some gains and bought some SPXU, some TZA, and some FAZ, and some SQQQ. I bought some inexpensive spreads that expire on Friday, but I bought a ton of them. When I say a 10, 200 to 400 contracts. So they're very inexpensive. So if the market goes up, it'll hurt my gains, but it's not going to kill me. And if the market goes down, they'll help me. But if the market drops for more than a couple of days, I'm going to have to look at what I'm going to do on Friday. My hope is the market goes higher and I cash them out at a 50% loss tomorrow. But if my whole investment's 15, 20,000 on a nearly $2 million portfolio, and I could get out of them and get 10,000 back, but that 20,000 will protect $500,000 in profits. I'm a happy camper to buy insurance. And the reason why I get a lot of protection for a little bit of money is it's very short duration. That's the S&P 500. If I look at the Dow Jones Industrial Average, it's been in a similar pattern. Today you had, an inside day, I guess, which may not mean anything, but you had a down day, a kahuna to the downside, still within the trading range. If I look at the Russell 2000, which has been the weak one overall over a period of time, it is still above its moving averages. Did have a breakdown today. Interestingly, it had a red candle high, which means this was the highest going back a number of bars, and it closed lower on the day. It's in a squeeze. Again, does it look like the end is near? No, I'm just more bothered when I see a big reversal in a lot of big stocks that have been carrying the market. Hence why my little bit more bearish tone or protective tone, more so than bearish. The happy camper has been the NASDAQ, and you look at today, it really moved up quite a bit. It ended up closing on the day down, but it closed, it was great until the last 5 minutes. The last hour, and it went negative at the end. Again, red candle highs can be signs of reversals. Red candle highs at the high jump bar. We saw one over here. We saw one over here. I'm looking for ones that at the high jump bar. We're at one here. Red candle highs at high jumps often get, as you can see, a 3-bar reversal and then a bounce off support. So will we pull back to the 17 and bounce? That would be my bet. And the same thing on the S&P, that will pull back and bounce off the support of the darkest box. But I'm not betting with my not born grandchildren's money. I'm buying protection and being safe. Now, the dollar has been sideways for some time, in my opinion. It had a big move up and down during the crazy days of March, but it's been sideways since, and it's been coiling in a smaller and smaller range. It's at the bottom of its range here in a squeeze. The VIX had been trending down, but we saw at 3 o'clock it popped. So the VIX had a green dart bar today. It's still below its 8-day exponential, 17 and 50-day moving averages. So, it's still got a little work to go up. And we saw what was leading today, and I've been pounding on these for a month now. Gold, this was the prior close yesterday after a strong market. Gold eased. Today, gold was right back up to its recent highs. In a squeeze, that is, a nice move today on gold. If I look at silver, I suspect I'll see something similar, but lower down the pattern. Broke up above the 200 decisively today. Will that be a spinning top island reversal, and tomorrow we trade down on silver? I've seen that happen before. And then gold miners, which I kept talking a month ago, why are they lagging? Why are they lagging? They're leading. And gold miners actually had a strong close today, closed near the top of their day. Look at the weekly chart. This was behind gold for quite some time. So a little bit more caution certainly is in the air. If I go to F7, I hit the warehouse view, and I bring up, I see, or I demonstrate for you that I have 175 securities based upon this view, which is price and volume, waiting 1 day, then 5 days, and then 3 weeks. You could see the precious miners, renewable energy, casinos are up on the top. I rather look at momentum. And so I like to look at 2-day force up. I have 87 groups. That's still pretty powerful. 2-day force down, I have 21. I think I had 5 yesterday. 5-day force up, a more intermediate period, I've got 97 groups up. 5-day force down, I've only got a handful, 12. So clearly, if I look at industry groups, when I see that many up versus down, it shows that there's still some strength in this market. The leadership group here looks like Precious Mining, not a big surprise. If I right-click, change the index group. I don't like it when the index has got the best score of the entire list, but I'll look at a few of these, especially since I own the first one. What I want to show you is today, industry PBS buy signals. We had 6 new buys today. We had no new sells. 65% of them are in a buy, and only 35% of this group. That's interesting. The numbers are different. I got a feeling that the index changes will be incorporated on a later update. But the vast majority of these stocks are in a buy. These buy signals are the John Person buy signals, which I can look at a whole industry group. And when I see multiple stocks in one group become a buy on the same day with no sells, that makes me pay attention. Let's take a look at some of these. Let me change this to my stock view. So what do I have here? On the top bar, which you won't see for a while, are Hindenburg omens. You don't get those until the market's at all-time or recent highs. And these are calculated on the NYSE. So they certainly predicted the doom and gloom in February. If you don't believe in the Hindis, it's okay. It's make-believe. But boy, oh boy, you don't see a sell-off without seeing them. The problem is they start occurring early, and you would have missed this run up. But I know a lot of people would like to have gotten out here and not roll this thing down all the way. The next is my weekly bongo. The weekly bongo to me is a good long-term trending indicator, and it will keep you out of most harm, but it's slow because it's weekly. Here I have the high jump bar. It's not my favorite version of the high jump bar. I'll be the first to admit and agree with you. I like it better on my other platforms, but when it's up at the top, it tells me we're stretched. When we're at the bottom, we are stretched the opposite way. So a green candle low occurring at the bottom of this channel is a buy signal, while red candle high, as I've already shown you, occurring at the top is a sell signal. Below that, I have the squeeze. I've got Bible gap ups here, which you won't see many on gold probably. Then I have the squeeze in mustard, mobile breakouts and breakdowns. Down here, I've got John Person's indicator. I've got it 2 ways. I have it as a arrow, a thick arrow here, easier to see, or as a ribbon. This is John's market catcher. These are Gil Morale's pocket pivots, OBV, on balance volume with the moving average. These here in green are Eurekas. Those are the HGSI trader follow through day to the upside. In red or pink to the downside. The darker the color, the more intense the signal. And on the bottom are what I call kahunas, as taught by Ian Woodward, that show a substantial move on a given day. So I'm all about patterns, and my patterns are both chart patterns and patterns of these colors. Now I like to put this view up here so I know what the fundamentals are, and I could see earnings per share growth here, and this is comparing the March quarter of this year to the March quarter of last year. I can see going forward I've got some pretty good earnings growth projected, and I see my multiple is less than the next quarter's earnings. I have some demand, and I have a small dividend yield. Earnings are already out. The next earnings are in August. On this chart here is a weekly chart. And on this weekly chart, I also have John's Person market catcher. This, which I need to retire because it was a poor man market catcher before I had the market catcher, and it's not nearly as powerful. And down here is John's signals. And we capture things in this box. I do, the way I've set it up is high closed dojis, low closed dojis, tells me what the market catcher is doing. And down here, if I didn't know already, it tells me how many signals in the index are buy, sell, and how many flip today. So American Barracks, as we talked about this weekend, high base. I thought it was going to break out over the weekend. It pulled back on Monday with a strong market. If this market trades lower, this will go higher, and it's sitting at recent highs. Still like American Barracks. A lot of these look good. Pat American Silver broke out today. It makes money. Its multiple is fine. Pays a 2.6 dividend. It's got a little bit of demand compared to the other. You can just go through this as top-down investing, folks. Find the best groups and look at the stocks. Yamani Gold breaking out today like the others. And you could probably go down this list and find your special. Do you want a cheap one? Here's Kinross. If you believe that this market and this economy have a ways to go, if you think the Fed's going to have to continue to print money, then you might want to be buying some gold for your portfolio. I'm not going to get into the debate between ETFs, individual stocks, and gold bars. I have all three. And I probably wish I had more gold bars, but they're kind of hard to store. Novavax, not hard, you just have to pay to store them. Novavax, like mRNA, is a vaccine. Like mRNA, it had a crazy couple of days. Like mRNA, it had a secondary last night, and like mRNA, it sold off today, but not as nearly to the degree that mRNA sold off. Look at the demand in this stock, 17.3%. Now, if you had followed my videos, I started talking about it here, back here. And I've been in this since the beginning of the year. And I got in at $8. And I've sold calls against it. I bought it back if it got called away. And I've made some decent change on this. And I remember when I first presented it, a couple people said, yeah, we've been in this for a long time. Do I think it's going to go? And I said, well, it looked better in TradeStation because it was so compressed here because it was flat. I once had another chart that had this pattern. If I was in a live meeting, I'd ask you what it was. And those that know me would say, oh, that was tandem, Jeff. It was like this, and that went up to 90 in 4 months, 5 months. So I guess I did it again. Novavax continues to look good. It's been showing up on the HGSI forum for quite some time. This here is a little concerning, but considering the market was down, that mRNA blew up a little bit today, I think that held up remarkably well. Sorrento, this is another crazy stock. Over the weekend, I said I couldn't touch it. Then I saw the futures on Monday and said, damn, the thing went higher, and it's pulled back. I don't even know what their drug is. You just got to mention COVID, and this is what happens. I call this my plug pattern. Here's a stock that back here was doing 1.5 million shares a day on a $2 stock. So $3 million could have bought the whole float. And here it did 507 million shares a day. All right, that is 20 times their average volume. And that average volume is now reflecting these days. If you go back here, it was $1 million, a couple million shares a day. Whenever I see this, it's short time. It's not, I don't buy these because they always come back. Then they go sideways, and if they're real, they go higher. But this is a sucker's move. I call it the plug move. If you've ever been to my live education, you know why. Dynavax, this one, we'll see what this one does. COVID information, big gap up today. See the Bible gap up fired. Don't know enough about this one either. A couple kahunas coming into it. I like to see who's going sideways. PMC was getting higher. Could have bought it right here following the things that I do. Mobile breakout from a squeeze. John signal firing. A supportive, constructive convergence on the PMC. It was too cheap for me to even look at. Inovio's, here's this pattern. Plug pattern, baby. 1 million, 830, 448, 990,000, 743. And then we get here, 14 million. Oh, 121 million. 138 million. And then it came down and went sideways. And the same thing I'll say about the others, potentially can go higher. But this piece here, you sell into that rally because you know what's going to happen. They're going to do a secondary and the stock's going to come down. Don't know Arcturus. Nice move here. Big topping tail. You wonder if some of this isn't done. Then you get the biotech index. If you like biotech, and maybe it's too late, but I've been in LABU. but I think maybe I'm going to take my profits on it. Had you bought, and I'm not saying that I did by any means, I try to be honest and not a fibber, but if I had bought it on the bottom day and sold it a couple days ago, I would have seen a 323%. I've had a nice move on it, but I didn't capture all of it. I would probably not have touched it until this day here, which is when I got into it, when I had a Eureka, a Kahuna, a positive convergence on my PMC. I was in a buy signal from John. So let's go back and look at the next group, electrical power equipment. I hope it says Generac, although it had a bad day today. GE, I was looking at this last night. It's hard to buy GE. It's kind of a dead to me stock. I am seeing a positive move on the PMC. It did have a buy signal come in. It actually looked pretty good yesterday on Sager's tools. And I find that a lot of the things that I end up liking with Sager's tools, I've gone out to dinner with the guy. He's my buddy, and I still don't know what to call him, Sager or Sagar. I'm going to call him Sagar because I like that. But he's a good guy, brilliant man. I can't believe some of his stuff he puts out. So let's just put in GE. And when I looked at it yesterday, what did I see? I saw weekly reversing here with that plus, which is that stretch, which tells me it's come down too far. Notice how the red dot and John Person called the top. I saw a Roy Kelly cycle, major cycle low yesterday, and an up move. It did pretty well today for a down market. GE is not my kind of stock, but maybe it's time to make a consideration. I did buy some Generac on Monday, and it had a topping piece today. We'll see. Weekly, it still looks fine. I've still got some profits in it from Monday, but I'm going to be very tight leash on this. The couple kahunas in a row. Notice the positive convergence on the PMC. Mobile breakout from a squeeze on Friday. I still like this, but I'm going to be careful on it. I wouldn't chase it from here. And I'll be watching that early tomorrow. Casinos and gaming, I have two. I have El Dorado and I have some Wynn. They're starting to open up. There was something today about somewhere Missouri or somebody, and maybe Mississippi or somewhere else is opening up their gaming, and Penn bounced because of it. These guys are going to suck fundamentally for at least for this quarter and next. But I think they're going to be judged on where they're going, not where they've been. So this one had a big move. As I told you, I'm in El Dorado. Had a nice move off here. Why would I be in El Dorado? I've been in El Dorado because back here, Kahuna, we had a Eureka. But the real reason I'm in El Dorado is I'm just betting, I can't remember exactly, but I'm thinking it was probably, I saw something with Sager's tools. And what I saw, if you go back a little bit, is I saw a reversal there. Interestingly, John Person stuff as well. Here's the buy time. That would have been one buy. This may have been another buy as well. Pull back to trend. It's bounced on trend. It's giving you multiple opportunities. The other one that I'm in is Wynn. And I took some profits today on that. Here's Wynn. Wynn had a new buy signal come in from John. It's had a nice move up off the bottom, but I don't want to be a hog. And I still believe that we're going to go from the top of the channel to the bottom of the channel, and these things may give up some of their gains. Las Vegas Sands and Wynn have some Macau exposure, so they may have some benefits in the recovery. Next one down is airlines. I'm not buying airlines now. Maybe I should be, and the one I probably buy, I'm going to look at Southwest in a second, but this is just bouncing on the bottom. I don't know how long it's going to bounce. Would you want to fly right now? here is Delta, and I say that nicely because my neighbor is Ed Bastian, who's the CEO of Delta, bouncing on the bottom. But I still don't get to figure out what their top tier is. They have the secret tier, Delta 360, and I fly a ton. I don't get that. Southwest Airlines has moved up off the bottom. This one and Ryanair are both the ones that I might be looking at. I don't see a major reason to own these unless you think the world is going to change. And it's going to change, but I'm not sure when. Semi devices have been leading. I own some AMD, but you could see NVIDIA. You know, here's a shooting star on the daily, shooting star on the weekly. The high jumps up at the top. I would book some profits on this. Does it go higher? Sure it does. But if this market pulls back some, don't you think it's coming down with it? Here's AMD doing nothing. Buy signal today. I've owned AMD since back in third quarter, and you can see the move it's had over the last 6 months. We've talked about it a lot on my videos. I know this is already going late. REITs, we'll look at this one, then I'm going to show you something else. Simon Property Group, up on top is a shopping mall. JCPenney is going bankrupt. Neiman Marcus is going bankrupt. Sears went bankrupt. Macy's is like $5 a share. I'm sure there's some people think these are going to be great and you want to buy them when they're on fire, and they're on fire. And yes, we could make the argument. We had a kahuna. We had a mobile breakup from the squeeze. The weekly bongo turned green. John's person signal came in. PMC is really supportive. Do you pinch your nose and do you buy Simon Property Group, who is the premier mall owner, still showing positive earnings growth for the next 2 quarters, if you believe it, paying an 11% yield, which if they can maintain, well, maybe I just convinced myself to look at it. I want to double click. Host Marriott, you know what they are. They're bouncing. You're going to have to see business travel to improve for that. But remember, the market discounts. The market looks forward. It doesn't always look backwards. Why did Physicians Realty Trust jump? Because physicians pay their rent. Why? Tell you a little bit. I shouldn't say this because I'll piss off all my doctor friends. Small businesses had to apply for the payment protection program, and they could get money to help them maintain their employees. Most of them are on TV crying because they can't get the money. There was something in the things to save the world that was the HHS stimulus. No one talked about it. But physicians have gotten payments anywhere from $15,000, $20,000 per doc to some specialties $600,000 or $700,000 a doc, where the Center for Medicaid Services has paid them a percentage of what's now probably over $50 billion. So last year, if the total bill of Medicare was $480 billion, and your practice did, say, 100 million, or your hospital, you got 100 million divided by 480 billion times 50 billion equals your payment. So the physicians are paying their bills. Now, let's be honest. Physicians have been in the front lines of this fight. Physicians in the emergency room, physicians in the ICU, and other first providers deserve the hazard pay and all this. And we don't want our doctors to go out of business. But if you think about it from an investment perspective, they're paying their bills. Physician Realty Trust popped because yesterday they said they're paying their bills. Welltower, another physician, medical buildings and others, nursing homes, probably a little bit more complicated, 5.8% dividend. Ventas, another medical related REIT, and then the gaming and leisures, which are here as well. So I think healthcare will come out of this strong. I think physicians will come out of this strong. And if that's true, then you might want to be owning things like Physicians Realty Trust, like Omega Healthcare Investors pays an 8.8% dividend, like there's a bunch of them. Some own hospitals. I want the ones that doctors' offices are in, because the doctors' offices, Healthcare Realty Trust, these docs are going to survive. 3.9%. Enough. Thank God for the government helping people. Just in healthcare, they got a big health, which is wonderful. What I just did is my version of a top-down review. I should have done bottoms up, but if I did that, we'll be here too long, and I did a long one over the weekend. Now, let me show you why I had John Person stuff put in very quickly. I'm going to switch my discussion, and I'm going to go into reference groups, all securities, hit that, and as you can see, I got 8,826 securities. I am going to go down to my John Person groups. I'm going to open up the bullish ones, and I'm going to look here, and I know that only, well, still a lot. And I should have this all securities index out. Well, it doesn't matter. 468 securities had a buy signal today. This says it was a buy signal. This says the last signal was a buy. Since it happened today, the day since the last signal was 0. High closed dojis, low closed dojis, and then weekly signals. All right, so I could go through all of these. Right now, they're ranked here. Let's just look at a couple of them. Here's Bausch and Lombs. Well, here we go. We got a pullback. We broke above the 50. We had John Signal Fire coming on mobile breakout of squeeze, pocket pivot, and Kahuna. That might be okay. I like it to be a little bit higher in their pattern. I don't know bottom line ePay, but I know that payment processors have been doing well. Look at this puppy, just broke above the 200, multiple Kahunas in a row. Yeah, should have bought it back here. Coulda, woulda, shouldas. I think this one's got more room to go. It is got a high multiple. Adobe, this has been one I've been in and out of. And you could see it keeps pulling back to basically support here, had another John Person buy signal. So some of the best stocks in the market are going to come up here, but I don't want to spend all day on these. I go down here and say, show me those, but I only want those whose PMC is improving or outperforming. Simon Property Group, oh my goodness. Here you go. You notice how it's getting less negative? That's improving. And a new buy signal, maybe I should look closely at this. Cerner is a software company that I compete against. They make electronic medical records. They had a buy signal today. I'm less interested in this. They're below their 200. All right, what else can we find? Person daily near weekly support. Tiffany's a buyout, and those are acquisitions, so that doesn't count. Daily buy with a weekly buy. Now he's got 313. I know these are in uptrends over 2 time frames. McKesson, you know, hospitals are using up all their supplies. They're getting that same government support. You think that the companies that distribute those supplies are going to be busy? Take a look at Cardinal. They had great earnings as well. McKesson, breaking out over its moving averages, mobile breakout squeeze, multiple kahunas. Look at the PMC. I like McKesson. I'm finding great stocks using this tool. Daily Trilogy buy. This is his best collection. So let's just quickly look at these and see how many of these are good. Bausch and Lombs, I already told you that's good. I don't want to see that since I sold my Baxter. Hold on. You got to make sure that you're going in order. Bottom line, we already looked at. Looks interesting. CoStar. I'm going to CoStar breaking out here. We already talked about American Barrick Gold. MGN Growth Properties. Here's another REIT. Yeah, I don't like it, but across its PSAR dot, maybe I should like it. 3 out of the last 4 days had a kahuna. Pocket pivots, mobile breakout from a squeeze, 7.5% dividend yield. Look at the earnings per share growth. Suspected to come in. Maybe I should like it. The point of scanning is you want something that is going to bring well-performing stocks to the top. There's IQVIA. right below its 200, a new buy signal. All right, what about weekly buys? Here's the 58 stocks that have a new weekly buy. Man, I thought it said Shopify was up 51% today. I don't know anything about this stock. But I would go down, I know Shopify. How about HCDs, which is one of my favorite patterns that John has. I own some C. C had great earnings this week, had a nice move up. Looks like I should be worrying about selling my C. Nah. And then how about weekly HCDs and a new person buy signal within the last 2 days? This is a great list of stocks to look at. Haven't seen Visa in a while. Maybe I should be watching. It's made its way back up. A high closed doji has to be real, has to be in a downtrend. The weekly is in an uptrend, so I'm not sure I'd consider it a high closed doji. You're not going to find a lot of things in bad downtrends. I mean, things have been coming up off the bottom. This one's got to get above their 200. If I think the market's going down, were there bearish stocks today? And of course there were bearish stocks today. So if I go here, how many had a new daily sell? Only 36. So I'm going to look at these very quickly, and then I'm going to say goodbye. Carvana, new sell signal. Kahuna, pocket pivot, all downside, mobile breakout. It's got a lot of things to support it underneath. Procter & Gamble, not so much. I like this one for a short a lot more. It's broken down below the 50. Mobile breakdown with the squeeze. The weekly bongo's gone red. You could see that your person market catcher is falling, and it had a kahuna to the downside. I know I sold my Campbell soup today, which it had a bit of for a while. And I can look through here, Ring Central. This has been a big player. It's too close to all-time highs for me to short. General Mills, is consumer staples rolling over? Again, it's too high for me to short it. Chegg, this has had this crazy run up. Again, it's hard for me to short stocks at all-time highs, but I might put that on a list that I watch. VIPS is another one. Now, a breakdown below the 50 here would be very interesting. Why did I sell my Campbell soup, you may ask? Don't I like dividends? I do, but over the weekend, it looked like it was going to go down, and it didn't do much yesterday, and whoops. I mean, on Monday, it dropped hard Monday. It dropped again today. Why? Person sell signal, mobile breakdown from a squeeze today, 2 kahunas in a row. All right, so I have the same set of stuff here with John's signals. PMC weakening, I got just a few. Procter & Gamble. Consumer staples are sick, folks. Breaking down here. Near weekly resistance. I'm going to have to look at this one. I have a piece of this. Yeah, that's getting tired. Fluidum, whatever it's called. So stocks that have run up and are failing. Where is that resistance coming in? If I went down to John's charts, we all have our charts that we like. It's right by weekly resistance, which are these blue lines. So that I didn't bother putting the blue lines on this. I just put the comments here that it's near weekly resistance. Daily sell and weekly sell, very few. Another consumer staple stock, Unilever, breaking down here as well. I'm not sure I totally like what I've got on the Trilogy sell. I'm still working on it. Some of these big power companies were rolling over the last couple of weeks, and you could see this one is failing at the 50, like that as well. So I use these to help me scan the market weekly. These will be stocks that should be in an uptrend and are starting to break down. I like looking at expensive stocks here. So you notice on the weekly how this stock is in an uptrend. It had a doji yesterday. Today, the weekly bar is a not a bullish engulf or bearish engulfing, but it's a bearish candle that closes below the low of the doji bar. Quiz, is this a low close doji? Yeah, you're looking over here going, Jeff, it says right here it's a low close doji. And I'll say, no, it's not. At least not yet. To really count, it's when the bar closes. If this bar closes anywhere below this candlestick, then it's a low close doji. And a low close doji is the best buy sell signal, that and a high close doji that I have. And I look at them every weekend, and this is potentially setting up to be something to short, but I wouldn't short it yet. Hain Celestial Group, another consumer staple. This one's looks a little bit better. It's higher in its pattern. All right, I've talked a ton. You don't expect these things during the week. You're probably not even going to watch this. If you like it, please hit the thumbs up and YouTube. Subscribe if you want to find out the next time I do this. Have a great night.